and welcome to another installment of Liberty Nation Swamponomics videocast. I am Randy Moran, Ellen's economics correspondent. Each week, I dive into the morass of top economic news stories and fish out compelling narratives, or I retrieve fallacies that have been accepted as conventional wisdom by the swamp creatures for years. This week, is it time to party like it's 1999? We have entered the euphoria stage of the global financial market bubble. The NASDAQ Composite Index appears to be targeting 12,000, as a tech-heavy index benefits from a wide range of factors, from historically low interest rates to money printing on the go and to heavy volatility. All the data indicators point to this market being eerily similar to the dot-com catastrophe of 20 years ago. Whether it is the number of unprofitable IPOs or the fastest 1,000-point climb since 1999, investors could be setting the stage for another market meltdown that similarly occurred from 1999 to 2001. The consensus is that there is a bubble in the NASDAQ, with valuations topping $17 trillion. That's equal to about 90% of the entire U.S. gross domestic product, and more than half the market value of all U.S. traded stocks. That's quite the meatball. Others will say that this time it's different, and to a certain extent, that is true. Interest rates are near zero. Back then, it was between 5 and 6%. Money supply growth was a lot tamer than it is today, and surprisingly, a lot of the tech firms that are dominating the NASDAQ Composite Index have strong balance sheets. Plus, it helps that the Federal Reserve is taking on these corporations' enormous debt levels to the tune of $50 or $60 million a week. Plus, if there were a steep market crash, the U.S. Central Bank would not let it happen. Thanks to its unlimited asset buying campaign to support the world's largest economy in the fallout of the coronavirus pandemic, the Fed could intervene and do whatever it took for however long it took to ensure the stock market survives. As we saw with the COVID-19 public health crisis, all it takes is one event to trigger an explosion in the market. But while the bubble popping is inevitable, you should not expect a 25% meltdown overnight. The dot-com bubble took more than 2 years to fully deflate, and that was without the Federal Reserve's assistance. The NASDAQ is unlikely to crash anytime soon, even if the US experiences another lockdown, since the central bank is willing to lend a hand and print out trillions of dollars. Until then, all we can do is either shout to the heavens that we are living in a bubble economy, or we can scoop up shares in Tesla or Apple and make a killing. That's it for me this week. Please read my full Swamponomics column, where I discuss the South Korea's ban on short selling, Exxon getting the boot from the Dow Jones Industrial Average, and the death of small business. Thank you very much.
Go deeper on the topic discussed in this video, head on over to one of these links here or go to our Liberty Nation Roku channel. Thanks so much for watching, and don't forget to subscribe and hit the notification bell for Liberty.